When America sneezes, the world catches a cold, as that old cliche goes. So the pessimistic mood on US stock markets spread to Europe, Asia and Australia, where the ASX and All Ords fell by a pretty steep 1.4%. As for what's behind this global sell-off, it's got something to do with interest rate cuts, or lack thereof, in the world's biggest economy. Earlier this week, markets were betting there was a pretty good chance of rates being slashed in the US before Christmas, and that a cut in January was guaranteed. But now, those odds don't look quite so good, after several members of the US Federal Reserve were out and about overnight, pushing back against this idea that the US economy desperately needs a rate cut right now. And the prospect of fewer rate cuts led to a severe allergic reaction across Wall Street's most overvalued tech stocks, which are being propped up by cheap money. So that's Palantir, Tesla, Nvidia, and anything that's even remotely connected with the AI boom/bubble. Back home, tech stocks on the ASX were hit quite hard, along with big banks like ANZ. But TPG Telecom was the worst performer by far, down more than 30% as it's trading ex-dividend. Basically, it means if you didn't buy its shares before today, you won't receive its next payout, which is going to be a pretty big one, as it'll include an extra $1.61 per share, after TPG shareholders voted last week to return $3 billion worth of excess capital to themselves. Meanwhile, oil prices rebounded, gold and iron ore were flat, Bitcoin's fallen below 100,000 US dollars, and the Aussie dollar is buying just under 65.5 US cents. And that's finance.